Okay, let's start the seminar, guys. It's 2:07. Welcome, everyone, to the midweek seminar. Getting back to what we say over the weekend, we say that in some degrees, the U.S. dollar should trade lower. That's exactly what it did. Now, the decline on the U.S. dollar, I mean, it hasn't have that much. I mean, it hasn't been that strong in some degrees. It's been low. The U.S. dollar is being low, no question about it. But it hasn't been that much follow-up to the downside with the dollar. Now, when we were expecting yesterday after the move in the dollar, we were expecting the dollar to have some type of continuation to the downside today or yesterday in London, or today in London, technically still today in London. And that didn't happen. Then when we start doing that day in the morning, we noticed that this specific pair, the dollar Swiss, we were proposing a triangle in this pair saying we were right here, if you guys remember. It bounced from the trend line, like we draw the trend line at the 618 right there. That pair, that bring my attention to locate a possible cycle within the dollar. Now, let me explain this pair first, and that way you guys understand where we're coming from. This pair is the dollar Swiss. I know Zach loves this pair. This pair create a bottom here, and it has made a 5/9 swing to the upside in this pair. Look at the RSI. The RSI is showing a lack of momentum a lack of momentum since the peak of the wave 3, but the peak of the 5 is the 5. It is the 3. In other words, from here to here, there is no divergence, and should be divergence, because each cycle should provide his own divergence. And not only that, as a whole, you should get a triple divergence, like we call it. Now, we have one divergence here, if you guys see, look. You got one here, you got the other, and you're missing this one. With that in mind, this is telling me that most likely the correction that we see in the dollar is some type of B-wave correction. Remember that over the week, DV, you remember, you've been mentioning everywhere, that we have been saying that the correction can be either a B-wave or can be the whole correction that we are expecting, this correction. Now, looking at this, it looks like we are in the B. Now, let's take a look at a small time frame of this pair, or in the 5th way. This is how we're laboring. 1, 2, 1 in regular 2, 1, 2, 3, 4, 5. You have a complete cycle here. Then you have 1, 2, 3, 4, 5. And then if you notice in the 4-hour RSI, the high is the high. Now, if we go a little more, like a 60-minute, you can see, in my view, that from here to here, the dollar Swiss did a 3-way. I can see divergence in this low, like I can see divergence in this low. So I can see 1, 2, 3, 4, 5, a cycle that started here and here with divergence, and I can see another cycle here with divergence that started here. So this is a 3-way move. Now, It's a correction. Do not need to be a 5. Now, what you got back is the same scenario. You have a 3 ways back here. Most likely, like A, like a type of flat B, there is 5, you can label 5 swings, or you can make the case for like a type of consolidation in the middle, compressed correction in the middle, but clear cut a 3-way move to the outside, right, to the equal legs. That high also there means to be around the 76.4. When you see a 3 out of 3 and you see a contracting price action, you automatically think triangle. That's why yesterday we present the idea of the triangle. Guess what? It bounced from the 76.4 and now it went higher. Now, as of right now, the 94.70 is still in place. The high today was 94.50. So you keep the idea of that triangle there alive. As far the move higher is fast, but it's in 3 ways so far. Now, which alternative do we have? We have that alternative that the one that I like is the triangle as it is here. That being the case, is going to make a low today, another move lower, and trust higher. Otherwise, it can expand a bit to around 94.80 area, a little bit, 3, something like this, complete a double zigzag structure, and then can go lower. And then you need to start all over again with a triangle idea. As of right now, looks contracting sideways. So that triangle, that consolidation there, together with the idea that if you place it, that with the idea that if you load this chart in the 4-hour and you see, looking at the RSI, you see that the high here is the high, and that level is also a 1.236 or the inverse wave 4. That makes me to believe in some degrees that we can see higher here. Right. Now, because I don't see divergency in this move, I was thinking at some moment that this can be a flat, still wave 4, but I don't see divergency here. All right. So with that in mind, you're going back to the dollar, the chart that you guys see every day. We can be still in the triangle within the dollar, like starting from here, A, B, Z, then we're going to see a D. This is delayed. That's why you're seeing here. We should be around here and then should trade lower and higher. And that be the B-wave triangle, like be someplace around here when you compare to A. We can be someplace around here. And then from there, if you take a look, is the 50 back. The 50 back. So from there, then we should get to the area that we've been mentioning, possible 82.99, which is pretty much a string, or someplace, I would say, if that being the case from here, around 82 to top the dollar. This market is very tough to trade, guys. I know Isa was saying the same things. I mean, very tough to trade. From my experience, I mean, when the market get like this, there gonna be good trades coming in, because the market is at the stage right now when, I mean, most of the traders, they are bullish dollar, but very good or professional traders, that they understand the principle of an Elliott Wave knows that this cycle is coming to the end. And then, I mean, at this stage, using this correlation, I have to tell you, I mean, I'm favoring the idea here due to the RSI divergency, that I don't got divergency in this move, that we have another run possible in the dollar. And then I start to see the idea that what we're seeing is, like we say yesterday, in the dollar, what we're seeing is the B wave instead. Remember, we have been saying all week that some type of correction is going to happen, and that some type of correction, that's possible, Hazard, that some type of correction is going to happen either in the B wave or the biggest correction. We haven't changed the view yet of the biggest correction in the dollar because, I mean, even a rookie in Elliott Wave, a rookie knows that it's 5 ways here. Now, you need a little more expertise if you want to know that another high can be possible because, I mean, anybody can count this completed. 1, 2, 3, 4, 5. Now, if you take a look at the RSI again, what you see the divergency, that the way it is, like the 3 of 3. You see the divergency of 3 of 5, and now you need the divergency of 5 of 5. You agree with that, gents? I mean, at least it looks clear to me. I always like to see 3 divergency in the RSI. The price is contracting, so don't discount to see that, to see the dollar swings to 97.74 area. Now from there, with the triangle, that's a gift. That's a gift here to fade this move, looking minimum to a 50 back, which is around 84. And then I want you guys to understand, and the way that we trade, we use a lot of a correlation. And this is enough for me to put a warning on the bullish of the dollar. Now, I want to show you a very interesting chart right here. But and you're going to, excuse me, because I have to switch easy now here. One second. You guys gonna see how correlated we are when it comes to this. Look. Okay, what happened here? Let me put it right pretty fast right here. I'm sorry, I have it ready. I don't know why it erased it. The euro dollar is pretty weak. Amazing. I don't know how the euro dollar is gonna bounce between you and me. It's pretty weak. But well, one second. I have it ready, you guys have to believe me. And I don't know why. I'll stay right there. Okay, here we go. Let me erase now some things. Okay, let me erase those trend lines right there. Okay, these 2 trend lines, let me take this out of here, 1 second. These 2 lines right there is the US dollar index and the dollar swings. I mean, I want you guys to see how well correlated they are. I mean, the blue is the dollar. It's going higher. The red is the index, right? Now, if you have a clear structure within the dollar sweeps saying that it's a determinate structure, you're expecting some type of cycle ending in the dollar. We knew that already. Now the dollar index is confirming the degree of the stage that we are in the cycle. Now, the view is the same. The view is the same. We're expecting a bounce or a drop in the dollar pretty soon, based on several factors that we have been mentioning to you guys. Now, look. Now let's take a look to these two legs, how well correlated they are. Same this low, same day that the dollar swings bottom. I'm sorry, that the dollar bottom, the swings bottom. Same day that top. Every swing, if you take a look, every swing comes very well correlated. That's why it drew me the conclusion that right here we should be in some type of triangle with a bust. A triangle is nothing more like James loves triangles because you can get it this way with a minimum risk and you can fade it otherwise because you know it's a 10-minute move, right? So if that being the case, this is the count in the red one. A, B, C, W, S, A, B with another move in favor of the dollar. So any questions so far? You guys understand where we're coming from, right? I mean, at least in my eyes, I got a pretty much a good idea what the market is doing in the way that I see the correlation that works. I mean, it's a higher look. This is the daily chart, dollar sweeps. You want to see, look, how well do they work. Remember, the sweeps did five. The dollar started early, but also have 5 swings. Look at the peaks. Look at the bottoms. I mean, they are very well correlated since the dollar finally got some legs. Now, if you take it back, of course, dollar index always being, look, correlated with the dollar sweeps. All right? So with that in mind, I got the 5 clear and the dollar sweeps. So that's what I'm expecting. All right? Any question, guys? Any question? I mean, I hope everybody understand when we stand. I mean, now, I mean, I have to tell you guys, that's the way it is. I mean, if we have the Holy Grail, I mean, we shouldn't be doing the service in some degrees. Me and James, and Vivi now, we should be living in Key West. I mean, which is very nice. So, but at least you can get it sometimes right. That's the way I like it. So that's what I think, guys. Now, you guys want to see how weak the euro is? You're going to get surprised now. Well, I'm going to incorporate here the euro and the S&P. Being the euro this, look at the S&P. Let me take the dollar sweeps and take the dollar out because look, this is the euro, and then 1 second, I took the wrong one, and this is the S&P. Euro being this Come on, what happened? Why I keep taking the wrong one? Now I got it. Look, they rallied together in October. S&P down together with the euro. S&P rallied almost, I don't know how many. What was this low, DV? I don't remember. Yeah, I have the euro index. I mean, rally a lot of points here. This was around 1158 right here, and the euro cannot find any support to the outside. So there is a shitter here, or the euro, like we said yesterday, already into and ending now the first leg of the trust for the triangle. But that's how weak it is. I mean, I can do that with every risk pair, and you're going to see how weak the euro is as a group. Now, let me get back to the other signal. Let me get back, no, 1 second before I jump into the other signal. Let me show you guys the euro, the dollar index in a small time frame. Okay, this is the dollar index in the small time frame. This one, better. Okay, what do we have here? I mean, what do we have is that he broke the channel, and agree with it, but in some degrees, it lose sideways either. This is going to be the trap of the trap of the trap if this thing does this tonight. Exactly, that's what we presented. Now, it's most likely that this is the scenario, like we said this morning in the euro, when we're going to see dollar weakness tonight again, and then going higher again. And then that being the case, I mean, unbelievable, but it's real. And then you can label like A, B, C, D, E, and the final thrust to the outside. That being the case, it makes a lot of sense to me because I have WSY and then I have WSY. I mean, I don't know how maybe I didn't get it because I missed this one in some degrees. The correlation between the S, the C, the W, and the Y, it wasn't there. It needs to be, guys. The wave are created by the FIBO levels. Don't doubt that any moment. Wave are created by FIBO levels. And that's how it is, and that's how always been. Look, there is a reason why this bound to happen here. Is because this lead is equal to this lead with a flat possible in the middle. Disregard is the count is like that. So that's the reason that it bounced there. And I can show you multiple times the same scenario. Look, 1.236. That's the reason why. I mean, wave, FIBOs, and wave are always together. Remember that. So with that in mind, then, like I said, we at least, if trusting for the triangle, if the triangle is in place, and I really like it, we should be 82 or this in or the test or the trend line, but I would say 82 can be a very good target to be happening. Now, let me show you something that I want to show you. It's on the euro. Now, I'm going to switch to the euro for a second. Give me 1 second. 1 second. Let me switch the E signals back. It's going to drop everything now. I hate switching E signal, but well, there is no way around. Otherwise, we cannot get the composed symbol because I don't trust the brokers. That's why I use that symbol right there. But it takes 1 minute. The euro is about to make 5 ways from the lows, or did it already. Amazing. Okay, let's start with the euro. Hopefully there you go. Okay, let's start with the euro in the 4 hour because I want to show you something right here. Let me see. Should be this one. Yeah. Yesterday, you guys remember that I mentioned that the last drop, he breached the channel and then entered again. Remember, Hazard, that I said that yesterday? That can be the case, guys. That can be the case. They're playing hardball. I can tell you that. Look, now we have the channel here. It broke it, but now it's almost inside again. Now, if that being the case, and the dollar switch analogy, if we can put it like that, is correct, we're going to see most likely 20, I can say we can see 26, 25, 97 pretty soon. Because you see, if it's a triangle, remember, trust for a triangle or boss for a triangle, they're fast. Don't take that scenario, not even for a second. Why? Because it's the same structure as, it's the same structure as the dollar. You have WSY, this is WS, and then you got WS, and you need a trust for the triangle or 3 ways coming out of the triangle. Yesterday, I took a hit today too, like most of you guys probably did. I buy here. I saw 5 swings, but it looks that the flat that Ryan mentioned was the one in place. Like many times, the most likely scenario is the one that play out. Now, if that being the case, this trend line should hold, and any short should be against the trend line there. All right? With that in mind, going back to the 1 hour chart, no, this is the other scenario. We should see if the triangle is in place. This was from this morning update. The triangle in place, then this is what we should do. We should see that recovery there and taking place in 3 way. Remember, it's an E way. The E way sometimes do not reach the trend line. So 130 should hold right there, or extension 130.50. But well, now for the short, you have a defined risk, which is the trend line and also the high of the C way. If you take a look now at this pair. To be honest with you, I don't know how I missed this one. This is the triangle in the dollar sweeps. You see? A, B, C, D, and E. This day is December 15th. And my good friend Zach, yesterday, he mentioned something that if the cycle have ended here, remember Zach? That's the same day that the triangle started in the dollar sweeps. And we see how looks like a contracted action. You're going to see this triangle become popular very soon. I mean, a contracted action that should trade lower, in my view. Now, that doesn't mean and nothing changed anything, in my view, that the bounce in the dollar is coming. If we take a look again, one more time, I mentioned to you guys yesterday that this is my favorite US dollar, euro dollar count. Let me see. So now this is my favorite. I don't want to miss the move to the downside. So I think you got to go with this. So technically that's possible. Technically, that being the case, we are expecting a pullback after the thrust of the triangle and a test of this trend line here around 136 minimum. And then from there, we should see the final leg. Now, let's go to the monster of the monster, which is the S&P. S&P should be driving crazy the 401k people. That should be tough for the 401k. It goes 20 points one day, drop 20 points next. Those people that doesn't understand how it works and they work, they should be they share the computer. They should be also driving crazy. Let me see where the S&P is here. This still is our preferred count. The 5 swings, 3 back. Now, we were expecting a move, even when a move about 1292 is enough. Enough to complete the proposal wave 2. But they can create more pains to the dollar bulls. If you're expecting a correction in the dollar against the dollar technically, then the S&P should trade in some degrees higher. Most of the times happen. I know there are times that the correlation break and they trade together, but I play the correlation. So, but at the same time, we play the Elliott Wave aging. Now, this wave right here is lacking momentum, and I start to entertain the idea that, believe it or not, we're going to see again this in the S&P. Disregard here the laboring, the internal laboring, but this idea is the one that makes most sense with the whole mess. Why? Because now the thrust or the move higher in the dollar triangle is going to create this selling, and then the recovery after, believe it or not, it's going to be this. And then they got together. That's, if they're going to trade correlated, that's the most likely scenario. Another scenario which is possible is that the S&P top right here, and then the wave 1 or that wave 3 is going to create the move higher in the dollar, and then wave 2 create the recovery, the drop in the dollar and the recovery in risk, and then they get the add together for the powerful wave 3 of 3. That's my view about the S&P. It's either one or the other. I mean, I don't see the triangle in the S&P. I think that at this time, if you take a look at the 4-hour chart on the S&P, where is it? It's on the cash. There you go. Should be this one. If you take a look at the 4-hour chart on the S&P, this was the alternative, right? Yeah. The move from here, this was in 3. This was a 3-way move onto here. We're going to label that wave 1. Then this move, let's label wave 2. And then we have the 3 and the 4. Disregard against the labeling, but now remember, a minimum test of this level is enough. Now, if we take a look to the RSI, you see, the momentum is lacking compared to this peak right here, and more with this peak. If you go to the 60-minute chart, the momentum is lacking. This is telling me dollar bull automatically right there. Now, the structure doesn't look completed because the decline here counts in 3. So we have to believe that, I believe we hold the trend line right there, that we are in some type of diagonal C-way, and then that the S&P is going to do this and end the move right there with a minimum target, because it's about this level, something like this, because I see momentum lagging. You cannot be a risk trader now seeing that momentum there. And then if it goes about this one, it's a much better for the dollar bears, for the S&P, for the bears, because that's 10-minute. Diagonals and triangles are 10-minute move. And we're seeing both right now. You see, Jens, we're seeing this in the S&P, and we're seeing the triangle possible in the dollar. So this is telling me that this is going to happen, minimum. I don't care if it's wave 1 of 3 or if it is a flat. I would rather see it about this level to get more confirmation, in my view, because then you're going to end the 3-way move already here. That's what it's telling me. Look at the momentum lagging right there. Still, we can get a 5th way. That doesn't matter. Still, we can see the move here and make it a minimum new high. Maybe we are now starting wave 3 of 3. Doesn't matter. But wave 1 was very big. So, not even, and relinquished to call wave 3, because in an ending diagonal, always the wave relationship call for 2 waves to be equal, and minimum 1 leg to be 618 or the previous 2. Doesn't matter how it comes. So I don't think that this is 3 most likely, or maybe it is 1, 2, 3, 4, 5, but I see 5 swing here the same way I see 5 swing here. So maybe we end it here, this leg, and then we're gonna trade. I don't know. We gotta be careful. But like I say, dollar bears in some degrees, or most degrees, in my opinion, is the best side of the market. Still, there is no confirmation at these degrees. I have to admit it. Yesterday we believe we have it. The bounce, I don't think today there is confirmation enough that the bounce is in place. I think that the triangle is the most likely scenario, in my opinion. You agree, James and David? That's what I think there, in my opinion. That's really, really what I think. And that the dollar index, I mean, for those people that love to trade the S&P, guys, right here, I mean, I like the ending diagonal to be a little bigger. I mean, but I believe that still you have to be a dollar bulls. I mean, yesterday it was like a, I mean, yesterday, exactly. Yesterday, I mean, it was like a trap in some degrees. Because like I say, everyone that is a technical trader understand we have a good friend of mine, and also of the V and Jens, is a guest here today, and he's a very good guy. And he knows what I understand too, that, I mean, we know that the cycle is coming to the end in the dollar. Now, picking the top is very hard. That's what we always say, don't pick a top in trading because it's very hard. Yesterday was a trap. In some degrees, it was a trap. So that's what I like about the S&P. I like it lower very soon. I always told DV, he needs to agree with me. I always told him, I'm going to know when become an S&P bill. I mean, because I know when it's time to sell any pair. Now it's time to sell S&P. In my opinion, S&P is about to top, either in the big way of a flat or exactly. So a big way of a trap or of a flat, or I mean, or wave 1 or wave 3, and then Armageddon is coming to the market near you. But Elliott Wave aging, which is more important than any buyers, is calling that the S&P is about to make this move. Either after to do this or to do this and this. And that's what all matters, guys. This is all that matters. Elliott Wave aging. The rest is illusions. Now, let's move on pretty fast to my beloved dollar CAD. Now, dollar CAD. Look, and this is going to be huge here. Dollar CAD. What do you have from here, guys? You got 3 ways. You guys agree, right? Everyone agree? 3 ways here. What do you have from here? 3 ways, right? So this comes with a 5 here, which is telling me that continuation to the upside is not yet ready to break this high. You are expecting some type of dollar weakness after a swing, right, of dollar strength. That's why we changed the count yesterday. We believe that the dollar CAD right here, let me adjust a little bit, is doing the same diagonal, believe it or not, of the S&P. There. With one more swing below, needs to go below 104.80. 104.48 here. Why? Because if we got 3 here, we need some time or 3 to the downside. Now, I mean, I see a 5 swings here, but because this is a 3, I don't see breaking to the outside. I mean, I know the triangle is popular. I know the triangle is popular from some people, but in my view, like I say, I'm an old school guy when it comes to Elliott Wave. I've been doing this for years, and I have my guidelines, sometimes different to Elliott, or a little more deeper than Elliott. Let's put it like that. because I don't think that Elliott knew about RSI when he discovered Elliott Wave. I do like RSI. So for me, this is a 5 swing. For me, this is a 5-way swing. So maybe we are ending W, same as here. We're going to get the push in the dollar here in the S, and then the Winnex in the cat, to ideally the equal legs that comes around the 97.52, which is also is going to respect this low right here, which is 97.20. But do not need to go that lower. I mean, technically, let's say if it goes here, it can go, but it needs to trade below this. I don't see the triangle. I can prove it to you guys. Look at the RSI. You see the divergence here. That's a 5. If you get a move or almost 500 picks with divergence, that's a 5-way move. Don't you agree, guys? I mean, that's a 5-way move, in my view. Now, how do we see it? That this is going to be what is the E-way on the dollar, or the final push in the S&P. These two pairs, they are very well correlated. And then from there, we should get the Winnex. And then the move that everyone wants to take, because this pair is going to trade 130 by next year. Now, if you take a look to the cat in a 1 hour, this is how it looks like. You're going to see A, B, C, 1, and in regular 2, and then A, B, C, 3, 4, down or pretty close to down, and then another leg down. Look, this is the 2-hour chart, right? Wave 3 ended here. That's why you don't get divergence yet. Now, but you can see the laboring on the RSI. Very easy in the RSI. You can see how the first leg provides you divergence here. That's a 5. You got 3, and then you can see the 3 ways here. If you downgrade the RSI, you're going to get divergence in this move. You can make the swing. I mean, you can make the case right here. Sorry, I think that I have it wrong here. This is an irregular 4 here. That's my bad. If you take a look at the RSI, look, peak, higher, this higher read. One second, Clifton. You see the irregular there, and then you also see the irregular. Every time that you see that the peak of the C goes above or the peak of the A, that's an irregular flag. It did it here, and he repeated here. So you see how this move from here to here provide you divergence. It did the irregular, and now it finished right here, some degrees, either A or 3, but more downside. And then that's what I like it. I mean, you see that there is no divergence here. That's what I like it, because the RSI, but same structure as the S&P. So I know that sooner or later, a move in favor of the dollar also is coming. So that's about it. In my case, I wish that all you guys understand what how we see it and what we are expecting. Now, it comes to the question. You guys can ask questions about any pair that you guys want. Okay, the first one, 5 ways impulse. Yeah, exactly. In the 5-way move question in the RSI, you're gonna get divergency. In wave 3, you're gonna see the divergency of wave 3 of 3. In other words, this is a 5-way move, right? You're gonna see a divergency here, a divergency here, and then you're gonna see a divergency here. I'm sorry, you're gonna see a divergency, my bad, here against this peak. Remember, you have a 4 and a 5 here. You're gonna see this peak divergency, then you're gonna see the divergency of the wave 3 of 3, and finally you're gonna see the divergency of wave 5 of 5. So you see generate 3 divergency on the RSI. That's the point. Any question, guys, about any pair? In the leading diagonal of the RSI, do divergency also. That's why you see the divergency already in the S&P. Okay, Aussie. And I want you to remember, guys, that remember, in the Euro case, you are not expecting a 5-way move coming out of the lows. Now, let's move on to Aussie. Okay, this is Aussie and the 240 minutes. This is what I like. I like Aussie going to 105, extension 105.84. I don't know if it's gonna get there. Now, it's very clear to everyone that this is the right structure. A, B, Z, W, flat, S, and then you need a correcting move here. You need a correcting move right here. Now, going a little small, but after, I think that it should go lower. Everyone is labeling Aussie triangles, and I don't think that at the end there is a triangle in place. I mean, we put the triangle to put the diagonals, but technically our count is this one. That we are in wave B and then lower. That's the one minimum. I'm going to stay like that. I mean, one second. I go there now. I mean, I'm going to stay like that because all you guys know me already. And then all guys too born. Even I know all, but well, I see 7 swings. I'm going to repeat it every time to prove me wrong. Even this is getting kind of very, in some degrees. I mean, but well, my 3802 is here. If my 3802 is here at 91.77, and I always say that Aussie is going to trade there unless it's in a triangle. But looking at the whole market correlation aspect, I start to believe that Aussie is lacking momentum. I start to believe that Aussie is going to reach someplace around 104 area. Aussie lost 76.4 sometimes. That number comes around 105. And I believe that from there, Aussie can trade lower to 91.77 minimum. Now, I say minimum because of this, because you guys know how I feel about the 7 swings, so I don't want to explain it to you guys. But well, short time frame that I know what ISA want. This is how I see it, Isaac. I see it as A, B, Z with a W, S, A, B, Z. This is a three-way move, guys. Don't label it as a five. That's not a five-way move. That's a three. Three backs. We maybe ended already B and another push higher. I prove it to you guys with the RSI. Again, without the RSI, I don't know how to label it. Look, the high is the high there. That's a three-way move. You agree, my friend? That's a three there, three backs, and then the high is the high. But right here, you got divergence. You see the difference? Right there, you have divergence. You go a little small, and then now higher again before lower. You agree, right? I know you do. I mean, but you have three swings here, you need three swings here. So I know DV is about to do a party. 104.72, 105 is a very, very area, a very good area right there for the Aussie shorts. Also, if you take this channel, comes over there too. That's for Aussie. Now, cable. Cable is the same, Isaac. Is the same. I mean, cable is, let me see, what is it? Let me see, I have more questions for Aussies here. 1 second, Isaac. Okay, no, the question is for Euro. We go to you now, Jake. 1 second. Now, let's come to cable. Cable, look. Same scenario, my good friend. High is the high, three ways. Same as Aussie. Three back, I still believe that cable right here this move provide me with divergency. 76.58, 70. So I'm willing to say 1, 2, 3, 4, 5. When 3 ended here, it wasn't in regular 4 and 5. So I can't believe, look, to the 618 there to the peak. So this is a five-way move. This is a 3. So if this is a 3 and this is a 5, what you need, my good friend Isaac? Another leg higher. That should be the E way in everywhere of the triangles scenario. I think it bounced today from the 50 back. No, it didn't reach it. Possible the drop, it looks three-way onto here. A flat here. And maybe did the B, and we got the C to come to around 155.42 before then jumping higher again. But you know what I mean? That's what I like about cable. I like one more leg higher in risk. I got no doubt about it. Call it the E way of the triangles. Call it whatever we can call it. But that's what I really, really like. That's what I really, really like. Now, the euro. I got a question there asking if the euro is not the triangle, what it is. Well, as of right now, if you go very deep on the euro case, nothing has denial yet. There's an scenario that this is W, Isaac. This is your scenario. Nothing has denied that. You agree? It's still valid. because that scenario is against 128, a very deep. No, it's at the 76.4, right? Yeah, it's at the 79. I mean, usually B waves go to the 76 or S wave, whatever. Now, let me explain. If this is not the triangle, then it can be this scenario. Then you're going to get, I mean, people going to go crazy because these swings can drive anybody crazy, including me. And then you're going to get this and then lower again. We explained yesterday on the video the case that this scenario was possible. Well, we explained it over the dollar, not over the euro. Because I keep saying the same thing. In the case of the dollar, the euro, I was looking 5 swings, and I won't call this a flat. This is not a flat. I mean, this move is not a flat. Now, you can label it like this, and there is nothing wrong with it. Like Ryan mentioned today on the room, you can label that as a flat right there, and it is valid. I mean, you have 3, 3, and 5. But I see people labeling this as a flat. That's not a flat. Okay, I mean, technically, that's a flat. So, I mean, that's not a flat in my opinion. I mean, that's not a flat in my opinion. In my opinion, that's nothing more than, that's nothing more that, give me 1 second, guys. I'm sorry, guys, an inconvenience here. So technically, if it's not a triangle, it still can be the case. Now, I know the load here is going to make the case for the top here, and then, but this is, I mean, this is not 5-way. This is 3-way. It's, if I were labeling as a 3, I label it like this, because that's not a 5-way move. James also mentions to me a leading diagonal in the euro from 131, I believe from here, on the C-way, like A or 1, 2, 3, we are in the 4 with another leg down coming in. So, but I see these sideways. What do you mean B on the dollar sweeps? Okay, I cover now. 1 second. So the key now, guys, is like everything in trading. Just wait. If you take a look at the small time frame, if you take a look at a small, first of all, look at the RSI from this move. There is no divergence, a little bit of divergence in an hour. So maybe it is down. I don't know. I was counting very deep on it. And then let me pass what I see. First of all, I see, and I believe that possible did a flat, possible did a flat D-way, all right? Because in my view, my book, this first move right here from here, you see, Isa, is a ABC, is a 3-way. There is no single pit of divergence there. Then, of course, you got the 3 backs, and you have this move here. So, possible, this took away of a flat. Now, if you go to here, look what we have. We have divergency, of course, and the 10-minute chart here, but you guys know how deep we go, and divergency on the 5-minute chart. Now, you got a swing, 2, 3, 4, and 5. It passed a little bit, the 5 equals 1, but didn't reach the area that I was mentioning on the room this morning, around 2880, which was the other. Now, let's take a look at this move so you guys understand what I mean. That maybe it's a flat D-way of, a flat D-way of a triangle. Now, let's go to the 1-minute chart right here. And let's get back cycle by cycle. You see 5 swings here. You go to the RSI, and you see that the last one here, it comes with divergency. That makes me to believe that this is 1, 2, 1, 2. Also makes me to believe that this is an irregular. And then you have 3, 4, and guess what? Another irregular. 5. This 5 close this 1, 2, 3, 4, 5 here. Then you got the irregular 4 that comes from here. You're going to see the RSI, how it went to the 23.6 right there to the pit. And then you got 5 equals 1, I believe, here. No, it passed. I think it's the 618, my bad. You see? The 618 to the pit right there. So I know using that analogy that wave 3 ended here. This move, let me repeat it back to you. Because this is hard. Let me put the 2-minute charts 1 second. Okay, let me put it live again. You got, all depends if the irregular wasn't irregular or no. Now, let me erase 1 second. Okay, now we got it. What I mean is 1, 2, 3, 4, 5. Look at the RSI. This is a 2 minute. You don't get divergence. You get it in the 1. I'm calling this 1 swing, 2 swing, and then 1 swing, 2. And then we got extension. If we use the Fibo relationship, I like it. You can call it like that when 3, 4, and 5 from here. 1, 2, 3, 4, and 5. Or you can start playing the games of the next. But the way I like it the most is like that. 1, 2, and then 1, 2, 3 in regular 4. We got a closer cycle here. I'm sorry, here. That cycle closed right there. Right? No, right there. No, my bad. It closed right here. That cycle closed right there, possible. And then you got 1, 2, 3, 4, 5. You see the divergency on the RSI, on the cycle that started, most likely here. this cycle close, and then you have 1, 2, and then 3, 4, and a 5, and then this whole move close. But, and then now it's either, you see, it top at the 3802 right there. So you have to wait and see. If you see that it's going to trade, it goes lower here, then you're going to see lower from there, and then see if the low hold. But maybe one more marginal low is coming in this pair, and then see what happened. You see, Isa, what I mean? That's, I mean, that can be very possible there. You see, that's the 3802 of this area. So with that in mind, it's going to end 1, 2, 3, 4. It's going to end 3 around here, and then it can expand to the downside. As it is corrective. That's all I can tell you guys. Believe it or not, as ugly as it is ABCWS, ABCY. It's no impulsor yet to the downside. Now, if you play the games of the NES, I think that you can count 17 swings to the downside. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, and 17. Then it's a complete move right there. And then we are either complete the move as a flat when you got 3, 3, and 5, or it's going to trade lower again before higher. Now, any question about the euro, guys? Now, the other question is the dollar Swiss expanding diagonal side and the dollar sit. Which time frame? You mean here? All right. No, I see more outside, to be honest with you, but it can be, yes. 1, 2, 3, 4, and 5. Yeah. It can be, if this is what you mean, yeah. Yeah. I think more outside, yeah. I think one more leg in the dollar, at minimum one more leg. I don't think that the bottom is still in place, to be honest with you. Yeah. Any other question, guys, about any pair that you guys want? So that's the idea, guys. I mean, I don't think that yet, but it's going to be very, very hard to trade in some degrees, because what happens is that ending diagonals create a mess within the market, because it creates the up and downs, the swings, the same with the triangles. So that's very hard to trade. But I would say in the short time frame, I believe, I mean, in the 4 hours, I believe that still we should favoring the dollar, in my view. I believe that still we should favoring the dollar in the small time frame. Okay, guys, there is no more question. The recording is going to be available later during the day. See you guys later during the Asia and London update. Thank you, guys. Thanks, my friend.